What's up, Spark Investors? It's Kevin. Today I'm going to be taking a look at Transocean, and Nathan is going to be taking a look at Nabors. Thank you, Mohammed, for the suggestion. If you have a company you would like us to check out and do an analysis of, leave a comment down below and we'll get it done as soon as we can. Stay tuned.
What is up, Spark Investors? It's Nathan here, and make sure to like, comment, subscribe to this video. If there are any stocks you would like us to look into, leave a comment down below. We'll be more than happy to look into them for you. And if you haven't signed up already, using our links down below. Use our links below to receive some free stocks.
Transocean, or ticker symbol RIG, is the 9th largest offshore oil drilling company according to 2018's revenue, which was just a little bit more than $3 billion. They're currently trading at about $2 per share. Looks like it kind of fluctuates 10-20 cents. The revenue has seemed to slightly increase year over year, and then also quarter to quarter, except for this last quarter, which it dipped down, but it's still at about the same level as it was the last March in 2018. Their gross profit has been going down quarter to quarter, year over year. They haven't turned a profit since 2016. The company has about $24 billion in assets, and they have about $12.5 billion in liabilities. They have quite a bit of long-term debt. So with that said, they do have positive equity, so if they were to go bankrupt, they could still have a little bit of money left over. On July 15th, Transocean announced that they have a backlog of $8.9 billion. So that means that they have $8.9 billion worth of work that they need to get done. They have several oil rigs that do not have any contracts right now, so they don't have a customer for those. So they need to find a customer for them or use some of that backlog that they have and use those rigs for that. They have earnings coming up at the end of the month, so we'll see how they did. They probably did not do that great with COVID going on and all that. From what I've seen, it looks like the offshore oil drilling industry as a whole has been declining for about the past 6 years, and it looks like 2022 is about the estimate that they think there might start being some recovery in it. A lot of states and countries and cities, they're going to start pushing a lot more for electric vehicles. This will drive a little bit of the oil industry down, but from what I'm seeing, there should still be some growth in this industry, as it's going to be a while before we ever get completely away from oil. Turn over to Nathan now, and he's going to go over the neighboring competitor.
Today I'm taking a look at Nabors. So currently the stock is trading at about $37. It's down about $70 compared to what it was before COVID. Before COVID, it was trading around 86 as the low, about 140 as the high, so staying around the $100 range, fluctuating now and then. They are the 8th largest offshore oil drilling company. However, they do own the largest fleet of inshore land drilling machinery, so they're kind of a weird situation there. Their revenue has been decreasing the past several years. In 2019, it was, and this is in millions, 3,054. It's up from recent years. However, we look back 10 years ago, it's actually down 500 million compared to what it was in 2009. Their net income has definitely been decreasing significantly. In 2019, they had a loss of 720 million. This is 640 million less than what it was in 2009, and they have not shown a positive net income since 2013. So overall, like many oil companies, they've been hit pretty hard by COVID. People aren't driving as much. They're also facing extreme pressure from political change and the shift away from oil. They're going to get replaced out with electric vehicles and stuff like that. Given the size of this company, if they can start revamping now and reach target, maybe shift their focus away from US and all these major first world countries, start looking at maybe some of these third world companies that are starting to develop, such as Africa. There's a few over in Asia that are still needing a little bit more development work. They can focus their energy towards selling oil that way. They might have a chance of surviving it. However, realistically, it's probably going to be the top dogs that survive this, and even for that, they won't last very long. So overall, I'm not super warm and fuzzy about this company. Stay tuned for my Spark rating.
It looks like analysis are giving this a hold rating. It looks like the low price target is $1 and the high price target is $5. Their average price target is $2.42. Like we mentioned earlier, this stock is currently trading at about $2. So I'm going to give this a 4 Spark rating. They have growth, they have good customers. If they look like one of their customers was like Chevron, pretty good potential there for this company. I don't think that they're going to go bankrupt. Their financials seem pretty okay. If they need to start selling some rigs, they could do that and they could offset some of that debt. I don't think that this is going to be something that's going to jump up dramatically very fast. It's it's going to be a long-term hold, and it's not got a ton of potential in the stock price. So like I said, that high price target was about $5, but I think this may be an okay buy, but I would not put just a ton of money. Don't drop your entire retirement on this company. So this company does seem like it's doing okay. So as the industry starts to recover, so will this company, and I think that it'll be a decent buy.
I'm going to give Nabors a 2 out of $6. My reasoning for this is because not only have they been losing money for several years, their net revenue is not growing. Those are definitely 2 bad signs for the company. It typically means the company's in decline and that they won't be able to keep up for very much longer. I would personally, if I'm looking for a long-term investment, I would definitely stick clear to this. I would take my money elsewhere. I'd be looking into more electric-based companies or renewable energy companies. That's personally where I would take my money right now if you're wanting to invest in energy. If you are looking to day trade it, there is some potential to catch it and maybe get a few more run-ups. However, I will forewarn you, their quarterly income release is coming up the next couple of days. They're expecting it to be bad, so there's a good chance the stocks will absolutely tank on that day. So happy investing, and we'll see you next time.